we intend to trade the swing. We are not going to go all the way down here, but we are going to attempt to move 50%. Very strong, lucrative move. Selling from current levels around below 154. We'll probably take a trigger at 154. Will take us to 150. Will take us to 148. 50% of the short. If there is something, let's say, risk adverse, we don't believe there's going to be any risk adverse effects that will risk adverse here, meaning geopolitical risk. So long as the markets are discounting that Mr. Trump will create ceasefires when he's in office, we doubt that we'll be seeing geopolitical risk. But we have a trend to the downside, again, because of the Trump regime is going to be impacting strong tariffs on all international trade. Will take the US out of international trade altogether. So will, of course, impact international exports, international economic goods that are aiming to be exported, and maybe even raw materials. All right, so we're looking at depreciation in the United States dollar against the yen. We're going to be moving back into cash in Asian equities, and therefore we're looking at 148. We'll take it back to the 4 hours. We believe we have topped out in B. Remember earlier, we were expecting B to create a double head. This is not going to be the case. The labels are correct. We have done an A and a B in green. We've done a C, but that C drops back to that neckline below level 1. There is a rejection. We're going to get that move here. It shows all the way to 140, or not even 148. 146.50 is a level 1. This is the most probable first move to the downside. We're seeing, of course, heads and shoulders formation here. More clearly showing here now is heads and shoulders. The labels are also showing. We have an A and a B, a 1 and a 2, 3, 4. We have finished 5. Used to have a 1, 2, 3, 4, expecting a 5, but 5 truncated with 3. We get to see the labels on coming charts. It's the same for hours. This is what we're trading. We will attempt to take a short above 153.80, and we expect to go to 148.50. It's that simple, and that 148.50 is really a level 1. Take it now to trade management. That we're going to that level 1, 149 or 148.50. Remember, that's why this level 1 is what we're showing here in our structure to show, because this is a cycle top or cycle bottom. So that level 1 here must be some kind of a cycle, other cycle top out of which the market broke out. Now the market is going to test it again. It shows here now as a cycle top, 149, 148.50. It shows an internal level 1, 2, internal 3, high degree 3 at that point, high degree 4. Remember, we've topped out in 5. We know this now. The market has done an A, has done an A, B, and a C into B. I think we get this more clearly on the next chart. So we have topped out in 5. The labels now are very important because that's where we get to do the shorts. Bear with us a second. Very sorry, excuse me. Okay, we have 2 motives, but I believe it's the yellow motive that we are going to be trading to the downside. We have a 1 and a 2, 3, 4, and a 5. Probably this is a leg A, this is a leg B, and we're going to get a leg C. Leg C is the 1 and a 2, and the 3, and the 3 is 5 swings. 1 appears to be still finishing off. We have a 1, 2, 3, 4. We're doing a very long 5, a 1, 2, 3, 4, and another 1, 2, 3, 4, and 5. We believe all this will equate to leg 1. We get a bounce into leg 2. We don't want to jump into the market. We want to sell the shoulder level. 154.60. Tomorrow we get PCE. Assuming we get a bit of a higher PCE, or even assuming the market gets confused, doesn't know whether the CPE should drive dollar higher or not, we're going to get spikes. It's wave 2. You want to sell 155. You want to sell 154.60. You want to sell resistance 2 on the 15-minute time frame tomorrow. Take this. Of course, we break the neckline, move to the next. Of course, you break this neckline immediately, move to level 3. You break level 3, you move to internal level 3, at least 50% between the 2 necklines. 151. We close before the end of the day. Assuming the only thing that would be on our side in this trade is not only the Trump tariffs, but also intervention by the Bank of Japan. Assuming the Bank of Japan intervenes, for instance, they might just intervene to spite Mr. Trump, actually, because if he's going to be imposing trade restrictions, okay, they're going to make the yen strong. This will weaken the dollar. Mr. Trump wants a strong dollar. That's what he has been saying. Well, it's, of course, at least the Bank of Japan wants a strong yen if they're going to, let's say, be moving out of the current equities into the yen. All right, so we're looking at 151. The entry is going to be around 150. We're looking at 400 points. Let's take it now to internal trade management. Level 1 is the most probable, 154.70. We can do, of course, shoulder levels all the way to 155.30. The hedge is above level C. You're already at the shoulder levels. All right, let's take it live. We have, of course, a trigger, but because of the current, let's say, higher degree segregations, we believe 5 is finished, we believe 1 is finished. We believe you have to be a bit patient and wait to do the entry tomorrow. I'm showing fib retractions from top of level B all the way down to level 1. Level 2 takes me to 154.80. Level 2 takes me to maybe 154.50. I will have a hedge, of course, presumably just above level B. So if I'm in at 154.80, 154.50, I'll have the hedge at 155.80. If the market breaks higher, I just take the hedge will open and I'll take profit for the hedge at the next internal resistance. We're seeing heads and shoulders. It's possible to still see a higher head. If with strong inflation, for example, we have a very strong number that is really not perceived. You would want to use a 15-minute tomorrow, not yesterday, of course, tomorrow, to do the entry. So I assume this is tomorrow's chart. I assume what we're seeing here is what we're going to be seeing tomorrow. I will focus on resistance 2, really, which is 155.32. Maybe don't get it, but 155, anything between resistance 1 and 2 should be seen, depending on tomorrow's numbers. Tomorrow's numbers are going to be lower than today's numbers because the market was on the downside today. So I will probably be able to get to 154.80, 154.75 between resistance 1 and 2. Resistance 1 and 2 are key to do the entry in. Usually, let's say above 75% of the volatility level to be seen will be between resistance 1 and 2. And keep in mind that the shoulder, at least we seem to have a double head here, and the shoulder level is 154.60. So depending again tomorrow where we get resistance 1 and 2, you want to adhere to the shoulder level showing here on the left. All right, let's move to sterling yen. This is going to be the last issue we're going to be doing today. If you have any questions or issues that you want to read or revise, please notify the moderator so we could attend to them before we call it an end to our analysis.